Welcome back, and let's look at another request. I mean, we've got a few requests here. Gent Limited, and by the way, somebody asked me the other day for how many years he's talking technical on the air. I have no idea, but what I do know is that if you guys don't participate and watch the show, this show will not last. But on the other hand, let's have a look at Genpact Limited. Well, first of all, there's the low. And there's the higher low, and we may be starting to see a beautiful move up here because it finds its base above this $41, and that is positive. What do I see here? I see a possible inverse head and shoulder. So yes, we may be a little bit early in this move. It's starting to move around. So maybe for the viewer that's asking about Genpact, I will only look at buying this share above 45.66. That's where the share will actually trigger a buy. Where's my stop loss? My stop loss will be at 40.83. It's a little bit of a big stop loss because it's almost 10%. So let's rather use a little bit of a tighter one, 42.25. That's okay. It's about $3, so that's not too bad. If I look at my target, well, first of all, to trigger this formation, it needs to get above the neckline. And remember, that is the neckline there. Always keep in mind, this formation is just a possibility until it breaks the neckline. And what I always say to my students, I say, when it breaks the neckline, sometimes what it does, it gives you a bounce above it, it comes back to test it, and when it moves up then you know the support was tested and it's a valid support and the share wants to move up. Look what happened there. It came back to test this support line, it bounced off it, and immediately it fell through there. So that just shows you it was a weak support line because immediately it turned into a resistance. So stick to your stop loss, and we hope that we can see this target reached to the top. Well, let's have a look at Goldman Sachs. Now, first of all, I mean, this is one of those major banks in the world. I mean, I'm sure they've got millions of clients. Well, if you look at it, there's the high, there's a lower high, all the way lower highs to the bottom. But what I want to say is, let's use this old system, draw in your resistance line, see where your support line is. There's your support line. Well, what do you want more? It is a falling wedge in the making. It hasn't turned this resistance line into a support. So for me, that is negative. So I will wait patiently for this resistance line to turn into a support. And that's going to be above 308.20. Below that, just leave it alone. Why do I say that? Because look at this move all the way to the downside. Many investors probably said, yes, we're going to buy there. Yes, we're going to buy there. Yes, we're going to buy there. And what happened? The share just took it still all the way to the downside. And there you are. Wait for that line to turn into a support. Make use of a stop loss of 295.40. And your target will probably be, if it works out, I just want to show you again. That's the width there. And we just extend that all the way. There you are. It can take the share all the way back to that little point there, 350.41. So for me at the moment, for Goldman Sachs, no rush to buy it. I'll patiently wait for the share to trigger a proper buy. I will have a nice stop loss in place. And by the way, if you don't buy Goldman Sachs, you can look at many other shares to buy. Unless you're a long-term buyer like Mr. Warren Buffett, I see that he bought another 9 million shares of Occidental Petroleum. He loves that company. I think maybe he wants a major stake there. I don't know. But and I do get a lot of requests just saying, Frans, how does that share look like? I see Mr. Warren Buffett bought it. And then what I say to them, wait for your indicators, wait for a formation. Mr. Buffett is in a completely different league. He just buy it for the long term. Maybe you haven't got that long term view, so then rather stick to your old model. Let's look at Barron Energy from the New York Stock Exchange. Now, You know, all the oil companies had some beautiful rallies. And when I get a request like this, where the share is at 0.00007, it's a fraction of a cent, a fraction of 5 cents, a fraction of 10 cents, and a fraction of $1. So what is my, almost you can say, advice about it? And that's what I always say. If you've got a share like this, put in $500 or $100 and just hope that it doesn't go under, and then maybe it goes all the way up to $40 or $50 and then you make a lot of money. For me, really, guys, to give an opinion on this share, I'm really nervous about it because it can, within one blink, it can go to zero. And remember, it's an energy company, and it tells you if the oil price is north above 100, and the dollar is strong, and these guys cannot have a share price of about 50 or 60 or 70 cents or even $1, then I will not invest it. So for the request, I don't want to disappoint you. I would rather stand away. And then, by the way, rather go and buy yourself a pie and a Coke, because then at least you can enjoy it with your wife. I mean, this share just looks not good, but maybe I'm wrong. If you can buy it, you can do so if you want to. Are we getting an interesting request? And that's on York Timber. And we've got an analyst in South Africa that likes the small caps, and he is brilliant, this guy. I mean, all the stock picks that he had, I mean, one was Gen. The market just loved the share, and his analysis on it was fantastic. Now, I always get some requests the moment an analyst comes out and he says he likes the company. Then I do get a lot of requests of people that say, Frans, do you want to give me an opinion on it? Now, always remember that the fundamental analyst, he can get a beautiful price on the chart, like in this case 245, where he can say this offers solid value. Why? Because he can analyze the company. And he can say at R2.40, this share is just so cheap, it must probably go to R9 or R10, I don't know why. But they did their sums, and they believe that the profit margin is right, the directors are doing a good job, there's a demand for the product. So I always say a fundamental analyst is brilliant in picking a bottom because they can work it out. The technical analyst, they haven't got the knowledge of fundamental analysts. And what do? They usually wait for certain signs on the chart to tell them that the informed capital knows a little bit more than you do, and then you buy it. Now, this is the big thing. For me, York Timber, I'll use this little line here, and there's my line, and I say that it must break this little channel. There's the channel, beautiful descending channel. That is usually a positive formation that's going to break to the top. It's a nice consolidation. You can almost say it's going between 240 and 260. If it breaks above 260, it can easily go to 281, 285. Remember, that's a technical view. But where will I buy it? One of two things. Either you're buying it right at the bottom at 241, all right, and you know that this consolidation can take it maybe down to 220. And or you buy it when this breaks to the top, and that is you buy it above 260, and you'll know your initial first target is 280. Why do I say that? Because sometimes a fundamental analyst can pick the share brilliantly. He can say it's 100% at that point in time. But not one of us know that this share is going to turn around within a day or 2 days or a week or 2 months. Nobody knows. So I just say I play the safe game. And for the safe game is I say I'll buy it above that resistance. I will have my stop loss in place. Because if the share maybe carries on for another week or 2 or 3 weeks, I've got my stop loss and I've got my target. On the other hand, remember, a fundamental analyst sometimes buys it for a 3-year or a 5-year or a 10-year view. We don't know the view that the guy's got. So for me, I just stick to the simple rule, and this is exactly that. York is a beautiful company. The chart is starting to show some signs that it can turn around. There's another thing to keep in mind with York. York is a share that is a little bit illiquid. So what you can find is that the share can someone rocket 2 cents or 5 cents or 20 cents within a day or two. So always keep that in mind. So I will say, let's stick to the simple rule. I think this analyst is great, and I think he does wonderful work, and I believe that he's maybe right. For me, I'll wait for this resistance line to break before I will just get into buy. Let us look at Yellow Corporation, also from the New York Stock Exchange. Almost looks like a York share, yeah. There's the momentum. It's still to the downside. There you are. You can see it. It's almost the same thing. Also a descending channel here. I'm not going to bore you with all the fancy details. I'm going to say, what will Frans do? Remember, Frans is not a fundamental analyst, so Frans doesn't know all that clever jargon that they've got, and he hasn't been to university for all those fancy things. What Frans knows is, Bushman tekening is telling me that above 352 something can happen, and it can maybe bounce off there. And if it breaks above that, it can go all the way up to $4.30. That's a nice target. And where's my stop loss? My stop loss will be simple and enough. 275. At 275, Frans will say he's wrong and maybe just walk away. I mean, there's the descending channel. The chart actually looks good. This is maybe the kind of stock picking stock that we're starting to talk about, like a York, like a Yellow Corporation. Wait for the break. That's the important thing. Wait for the break and then you enter, but stick to your stop loss, because this market, I mean, a lot of people say the S&P is already at prime, at a good place to buy. I'm not so sure, because I haven't seen capitulation in this market, and I'm waiting for capitulation in the Nasdaq and the S&P and the Dow before I get involved on a serious note. Well, thank you for watching the show. Visit our website www.fransdeklerk.com for more info, and we will chat again.